Predicting the market is never easy, but we bring you the experts who are getting it right. The Market Moves end-of-year poll forecast within 6 points where the S&P ASX 200 would end in 2009, 4 months before its close. And our most recent interest rate poll was the only published poll to include The Economist, who predicted the Reserve Bank decision.
Well done, the Reserve Bank.
When it comes to the numbers that count, you can count on the Sky News Business Channel. Good afternoon, I'm Richard Goncalves. Our top stories this trading day: shopping slump, Westfield reports a full-year net loss of $458 million. And our share market really bouncing back, having one of its best one-day gains so far in a few months. First of all, the ASX 200 performing quite well today.
It certainly is, Richard.
Julia Lee now joined us live from Bell Direct in Sydney. She's got more details on the Australian share market, which is soaring right now. Julia, why so?
We're seeing the Australian market near the highs of the day.
Westfield has unveiled a full-year net loss of $458 million due to sliding property valuations in the first part of the year. The property giant had to downwardly revise the value of its property by a whopping $3.5 billion. Good afternoon, I'm Richard Goncalves and welcome to Rates Reaction. We will find out in just a few moments' time what the RBA has decided to do with interest rates. Interest rates are virtually assured to rise later today, with almost every economist surveyed in the Sky News Business Channel interest rate poll predicting a 25 basis point increase. 93%, or 14 out of the 15 economists who participated, say the official cash rate will climb to 4%, with many saying the RBA is still keen to move rates to a more neutral setting. The one economist saying rates won't rise is Clifford Bennett from Hurston Economics. There's little agreement, though, as to the future of interest rates, with most in our survey, in fact more than half. So for some immediate analysis and pre-analysis, we are being joined right now by Craig James at CommSec. Craig, first of all, the market's pretty much saying rates will rise today. Why do you think that's the case?
Well, for the simple reason that interest rates are far too low. Assess the impact of its
I'll interrupt you. Clifford Bennett is right. The Reserve Bank has decided not to lift interest rates. Interest rates are staying at 3.75%. I can see Clifford smiling in the background here. Just very quickly, and I know, you know what, Craig, how about I let you take a look at the statement first of all. Clifford, we'll come to you right now. I mean, all we're getting are just the flashes right now. The Reserve Bank saying it's likely, if the economy improves, rates will need to be raised further. But right now, rates are unchanged. Your immediate reaction?
Yeah, no, I think that's fabulous of the Reserve Bank. I really do. Well done, the Reserve Bank. OK, unsurprisingly, we're seeing the Australian dollar plummet right now. I don't know if we can bring up the chart of the Australian dollar. It was trading at around about 89 US cents, right now at 88.4. Hopefully that chart will come up very soon. 88.35 is where the Aussie is right now. So it's fallen around about half a cent immediately. Also hearing the RBA saying its concerns regarding some sovereigns, that they've increased, that rates to most borrowers are still lower than average. Inflation is expected to be consistent with the target in 2010. With more details, we are joined live from Melbourne at IG Markets by Chris Weston. Chris, what's your take as to what the market thinks and that obvious reaction from the currency markets?
Yeah, in terms of the equity markets, you summed it up.
OK, Julia Lee, appreciate that analysis. Thank you very much.
Thanks, Richard. From
Julia Lee, let's go to Justin Smirk at St George. He's in Sydney, standing by live with his reaction to the surprise decision by the RBA to leave rates at 3.75%. Justin, what do you make of this decision?
Well, it seems really interesting that they've brought in what's been going on in the global environment.
Tonight, bank on it. Upgrades for Westpac pushes the sector higher, but is there any value left? True Blood, CSL surprises to the upside with its profit numbers, prompting brokers to review future earnings. And our share market enjoys its biggest one-day jump in almost 3 months. Good evening, I'm Richard Goncalves. Welcome to Market Moves. Today's star performer on the S&P ASX 200, Manara, the day's dog, iSoft. We've got more on those later, but first to the share market, which had its best one-day gain in almost 3 months. The S&P ASX 200 rising 100 points or 2.2% at 4,668. We were as high as 4,673, as low as 4,585. 1 billion shares trading hands today, valued at $5.4 billion. In terms of market cap, look at that, a good day for everyone. BHP Billiton close to $3 billion more in terms of value compared to yesterday. The bank's performing solidly. Over the next page, though, Telstra, the same as yesterday, $38.6 billion, and we see a rise of $500 million for both Woodside and Woolies. In terms of the major sectors on the S&P ASX 200, the best performing was the health index, up by 2.5%. The worst, but still up, the telecommunications index. It added 0.1%. In terms of the number of stocks that rose and fell today on the 200, most increasing 84% or 167 stocks out of the 200 finishing in the money. The top market movers by index weight, the main reasons why the share market finished in positive territory: BHP, Commonwealth Bank, ANZ, Westpac and NAB, so the banks. And the worst performers, or the bottom market movers by index weight, Westfield, Coca-Cola Amatil and Primary Healthcare. Chris Kimber from Bell Potter joins us now in the studio to tell us exactly why we've had such a good day. It's a good day to be on the show.
It is. Well, thanks for organising, up 100. I'm happy with your booking skills, really. Yeah.
Why do we see this gain, do you reckon?
Look, I think it's been a rally that's been building up for a little while.
OK, so Westpac are sharing plenty of banana smoothies going around there. Let's take a look at Outperform. Outperform is when we ask the brokers which stocks or sectors they are liking or buying right now to outperform the market and outperform their competitors. You've picked 2 stocks from memory. Yep. First one, AWC, Alumina.
Yep, look, Alumina, I think I talked about it with you last year. And
let's go and take a quick check now of the bottom market movers by percentage change. Firstly, on the All Ords. On the 200, the biggest loser today, iSoft, shares down by about 5.5% to 52 cents. Primary Healthcare, the second biggest loser today, down by 3.89% to $4.70. And the third biggest loser by percentage change is Sundance Resources, off by 3.5% or 0.5%. These are now the bottom 8. At number 4, ResMed off by 3%, Rock Oil losing 3%, Coca-Cola Amatil came out with some profits, disappointed some, down by 2%, Charter Hall Group off by 2%, so too Boral. But Westfield as well, shares down by about 1.5%, the company unveiling a full year net loss of $458 million due to sliding property valuations